Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-hosts, Mark Hanf and Nam Phan of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And one has to think that when we get to the third situation, what do they call it, of the COVID, that they're going to be opening up? What do they call it?
Oh, stage 3, the third stage.
Phase three. That's the name of it. That they'll probably be opening up then, I would think. Let's see. Today's trivia theme for all of you scientists out there is biology. Don't worry, these questions are not going to be too hard.
Biology.
Biology, yeah. So,
all right.
So audience, I'm going to start off today because I was listening to a webinar via Zoom nowadays. That's how everything's done. Mark's favorite economist, Chris Thornburg from Beacon Economics. And it was actually very, very good. He was talking about the same sort of stuff that we've been talking about with regard to how we kind of expect a V-shape rather than a U-shape recovery. This is barring if we don't have a huge second wave of the virus where they have to do more shutting down, and that there's a lot of pent-up demand where savings are actually going up because what's going on is people have no place to spend their money. I mean, yeah, there's Amazon and stuff like that, but they're not going on vacation. They're not doing all this stuff, and the government's paying them like unemployment and other stimulus package. So people and they're getting some reprieve with rent in some cases and mortgages in some cases. So there's all this money that eventually will come back into the economy as soon as things kind of come back to normal. So he was actually pretty optimistic. And as a reminder, Mark has told us in the past that he was one of the few guys who predicted the Great Recession about a year or so before it happened. So he definitely has a lot of credibility. And he said that, this crisis is nothing like the Great Recession, and it makes sense because, people got laid off temporarily now just because businesses had to shut. I mean, it was a man-made type of thing. It was not an economic situation that kind of, threw us all for a loop, so to speak, with credit crunch and all that.
Yeah. Well, then, of course, in the news this week, the media is making sure we all know that we're officially in a recession right now.
Yeah.
So then the second part of the question is, so when's the next? So when's real estate going to crash? When's real estate going to go down?
Yeah.
And I'm sure Chris may have touched on this, and other experts are. Real estate prices aren't going anywhere, especially in California.
No, and he said also that this recession that they've talked about, it might be similar to the one that happened in 1990, where it was actually a very quick recovery. Which I could see that in this situation too, because all the economic factors prior to COVID were looking fine, and then you have this immense unemployment, which was again man-made, and then once people come back to work, guess what? It won't be exactly business as usual because people are not going to maybe flock to a stadium right away, but it's amazing how people's memory of that stuff is very short-term.
Yeah, well, the media tends to exacerbate it. So one thing I always remember about Chris Thornburg, one of his lines is miserableism.
Yes.
And, the media feeds that.
The media feeds miserableism to the masses.
Yeah. It's like the goal of the newspaper publishers is to produce newspapers to get people to buy them.
To induce fear and get you to read, and that's get people sitting at home, taking in every headline, every juicy headline. No, it's interesting, so he was talking about a V curve because it's interesting that I think there are segments of the economy that may not bounce back as quick, because it's funny how there's articles have abounded in the media recently. Will it be a V curve or a U curve or a C, or a W? Really it's I think for us, because we spend a lot of our energy talking about real estate, or focused on real estate and real estate related activities, investments, et cetera, and we're focused mostly in California real estate based investments. and market conditions. And I think that if there's any example of what's likely to be a V-curve recovery, it's going to be real estate activity and real estate related activity, including mortgage investments, which we specialize in here at Pacific Private Money. Other parts of the economy, maybe not so much. Unemployment might be more of a U, because employment, we may see a number of companies not rehiring as fast, not as well as a significant amount of businesses won't come back at all. Some have predicted as much as 25% of restaurants not reopening, especially in San Francisco.
Right?
Movie theaters,
Movie theaters, restaurants, some retail, some offices. Work from home is going to only increase as a percentage of overall employment. So there'll be segments that aren't going to feel like they're recovering quickly. Although that brings up another topic about unemployment. I mean, Edward, you and I just had a conversation with a potential partner that we're working with in Texas, who is having trouble hiring back people. He furloughed several on his staff, and they don't want to come back because they're making more money on unemployment. Between all of the various benefits they're getting, they would take a 20% pay cut to come back to work for him at what he was paying them before.
That's not a big incentive for people to come back to work. Hey guys, we're going to cut to our first commercial break here. We're talking biology. The process of pasteurization is named after which famous French microbiologist? Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. Question again, biology here. Is the process of pasteurization is named after which famous French microbiologist? Stay with us. The Best of Investing is going to be right back. Don't touch that dial. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan of Pacific Private Money. Our first trivia question was, the process of pasteurization is named after which famous French microbiologist? Mark, what do his friends call him?
Louis.
Louis Pasteur. Louis Pasteur, yeah. Hey, guys.
That's a softball.
Oh, so that is a softball one. And the other two are somewhat softball questions. Also, guys, you know that Mountain Mike's Pizza in San Rafael is still doing pizza deliveries. So even though the COVID's going on, check them out at Mountain Mike's Pizza in San Rafael. They have very, very good pizza. In fact, we used to get that for Super Bowl, I remember.
That's right.
Tom, take it away.
Yeah, I mean, so in the last segment, Mark was talking about how 25% of the restaurants may go out of business, but you're mentioning Mountain Mike's. I mean, all of these restaurants that have been doing delivery, I imagine they've probably seen growth over this pandemic period, and will probably continue because people probably built the habit of, hey, let's just order delivery versus going somewhere. So I could see that being a permanent change where, not fast food maybe, but delivered food continues. So
they have, in a situation like that, you basically save on the payroll of waitresses, but you still have all your cooks and that sort of thing.
Yeah, and space too. You don't need as much space. You just really need a kitchen.
Yeah.
So, which is interesting. A lot of restaurants are going to have to change it. In fact, downtown Novato here, where we are, they're starting to close the street, downtown Grant, over the weekends, right? Is it?
Yeah.
It's going to be for the foreseeable future where the main street closes so that restaurants can do outdoor dining. And, that's going to be really great for the summer months as to allow people to get back and to allow these businesses to start getting back to normal as well. So
and still practice social distancing, 6 feet, that sort of thing.
Yeah.
We just won't recognize each other walking by because we'll all have masks on. We'll, hey, how you doing? How you doing? It's like, oh, wait a minute.
Wait, can I cut a slit in my mask to put the food in?
That's it. Yeah. You can create like this mask with a little trap door so you can hide your food in.
Well, what's funny is you hear about like on airplanes, people are going to have to wear masks, and I'm thinking, if I have to go cross country for a 6-hour flight, I don't want to wear a mask the whole time. And they say, well, you can take it off when you're eating. Guess who's going to be eating for all 6 hours?
Guess who's going to
one peanut at a time.
Edward, your sticky snack bag is
Yes.
as big as ever. but
Probably
so this leads me into another segment on retail. So, office space and, everyone fleeing downtown, financial areas, financial districts. And this one article talks about how the pandemic froze demand for office prop tech. So if you don't know what prop tech is, it's just really technology-enabled office buildings, like using an RFID card to get into an office versus having a key. That's been around forever, but now they're coming out with tech like using your smartphone to open your office building door automatically.
Oh.
Or being able to walk up and into an elevator without having to push a button, or temperature reading technology to allow people to just bypass tighter scrutiny because the tech can see that they don't have a fever. So one of the changes you're going to see in commercial real estate are buildings that have prop tech that allow kind of touchless interaction with the office building. Those are going to become the attractive ones. People are going to be looking for those as tenants to protect their employees.
Yeah, because even after, eventually this COVID thing is going to go away, but I think people are going to kind of think about, hey, that's not a bad idea, to kind of stay healthy, because who knows when the next pandemic is going to happen.
Right. Yeah, or the next calamity. So, commercial real estate, which is not an area we're focused on so much, we don't lend in that large commercial arena, is going to experience a lot of change. In addition to things like prop tech, it's just spacing of employees in a workplace, or maybe having days where some people come in and some people don't. And in fact, our small office here, we're looking at that, having people coming back in.
So I could see that a whole new generation. They always talk about inventing generations of new businesses, or at least expanding. And in this case, like you said, there'll be a bunch of companies coming out competing for hey, we'll change your office door, so all you have to do is use your smartphone to open it up.
Yep. Or Edward, you'll be going around selling masks with little trapdoors.
Little trapdoors. That's right. Exactly. I did trademark that, by the way.
Did Chris Thornburg talk about the commercial space at all?
He did. He said that he thought that the idea of people working at home wasn't going to last too long, because people need the interactions. It's just not the same thing. He goes, people eventually they just go, I can't stand just being at home all the time working. So for at least a couple of days a week, they would come into the office, and I could see that.
Well, as a business owner, as someone who employs 12 people here at this office, I will tell you that, and this is a little bit old school, I probably get this from my dad, but I just don't know that I believe that, I'm getting 8 hours of work from somebody who's working from home. First of all, we've got dual screens here, we got the high-speed internet, we have all of the interactions that need to happen on a regular basis. Now everything's going over instant messaging. Some people are complaining about bad connections at home, their home Wi-Fi is down. It's just, I've noticed, the numbers indicate that, we've seen a dip in business overall, and a lot of people I'm talking to have seen, the coronavirus dip in their business. So even though we're fortunate enough to be in a business where we could keep our doors open and there's still demand and we're still doing business, the overall efficiency, in my opinion, has gone way down. So and that's not really for every single function. Some of our, I think our marketing department is doing just fine. They don't really need to be here. But the underwriting department, the documentation compliance department, the loan servicing, I'm seeing a strong dip in efficiencies because they're not here in the office every day. And yet my payroll is still exactly the same. So as a business owner, I'm not happy about that. So
well, I can see where, if the collaborative of being able to be in the same office, you just kind of yell over over to the next office, Hey, Joe, come
Yeah.
here for a second. I got to show you this versus, trying to get on the phone or Zoom or texting and
No,
all.
absolutely. No, that interactivity is really important for a lot of businesses. Maybe not some tech companies where everybody's just staring at their screen 8 hours a day and they don't need interaction with others. But our particular industry, like many, there is a certain, there's a certain efficiency of having to be able to communicate across cubicles.
All right. And when we come, we're going to cut to another break. Let's get another break. When we come back, I want you to explain how come the fund increased the distribution last month, because I noticed on my check it was actually higher than it normally is, and I like that. Okay, second trivia question: which human organ is important in releasing digestive enzymes and insulin? Okay, we're talking biology here. Which human, or I guess this is more physiology, isn't it? Which human organ is important in releasing digestive enzymes and insulin? Call 888-912-1190. First caller with correct answer is going to win that Danny certificate. Don't touch that dial. We'll be right back. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan of Pacific Private Money. Our second trivia question was, which human organ is important in releasing digestive enzymes and insulin?
Pancreas?
Pancreas. Very good. Man, you guys are just smoking.
I'm not even sure I have one of those.
Okay, so before we cut to break, I was just giving a quick little tidbit here. I'm an investor in the fund. And ordinarily the fund pays around 7.5+%, but the last distribution last month blipped up a nice amount. I mean, I think the distribution was annualized over 8%. Why was that such a good deal? I mean, what happened?
Well, let's let the audience in a little bit on that conversation. You say the fund, they're going, what fund? A fund? So at Pacific Private Money, we have multiple funds, but what Edward's talking about is what we're now referring to as our legacy fund, the Pacific Private Money Fund. We launched that back in 2013, and it's a mortgage pool fund. In other words, the money in the fund is used to do only one thing, and that's to make real estate loans or loans secured by real estate mortgages in California. And that fund has grown in size to about $62 million in assets under management right now. And again, almost all of that is it's all loans except one property that we took back. So there is an REO property in the fund. But again, the Pacific Private Money Fund, that's the name we came up with for our first fund. And it has been paying the last couple of years right around the mid to high sevens. Is kind of the rate that it's been generating in terms of income, and that's based on the portfolio of loans in the fund. But every now and again, we have to foreclose on a property. Not every borrower is perfect in our industry. We're still considered hard money lenders, and some of those hard money loans come back to us in the form of we foreclose, it doesn't get purchased at the auction, we end up owning it. So we take over that property, we rehab it if necessary, and then sell it, usually for a profit. In fact, every loan that we foreclose on in the fund, which really I think to date it's been less than a dozen over the last 8 years. We've never lost money on a foreclosure, and true to that, we sold a property in April that had a nice little profit for the fund. So what was the annualized return? Was like an 8.2 annualized.
Yeah, that's what it was.
It brought up the distribution for the first 4 months of the year, the first third of the year, upwards of about 7.8%, which for a California mortgage pool fund is actually very good return. California mortgage pool funds right now, on average, are paying in the 6% range to low 7% range. There's not a lot of them that are paying in the close to 8% range, unless they're using leverage, in other words, cheap bank capital to create arbitrage to boost those yields. We don't do that in the fund. The Pacific Private Money Fund is an unlevered fund, so it's pure yield based on the notes that we have in there. We've got a good collection of notes, almost all firsts, some well-secured juniors, and notwithstanding the little boosts in income that we get when we foreclose on a property and sell at a profit, just the note portfolio itself has been producing a strong 7.75% return for our investors. And so over the last 8 years, it's really never dipped below 7.5%. So it's been between 7.5% and 8% on a pretty regular basis, and that's the distributed yield. If you can be a fund investor and maybe you put capital in that you don't need income from, then you could be a growth investor and allow your earnings each month to compound, and those compounded returns have been consistently over 8% for the life of the fund. So all good stuff.
You were mentioning about other funds not paying as well, and in fact, there are a couple of funds that I know and won't mention on the air that have dropped their yield considerably, and I think it's because they're putting extra reserves and extra money in reserves because they're expecting losses.
Yeah, they're creating loan loss reserves in anticipation of losses. If there aren't losses, then obviously they'll make those distributions probably by the year end. So that's an accounting measure that, if you're a member of those funds and you're seeing that, you're probably concerned, especially if you rely on that income. Yeah. So it's it's a very interesting thing. So mortgage pool funds have certainly grown in popularity since 2010. We work with a lot of different investors in what we call mortgage investing or the alternative investment space, and we do have investors that prefer to invest one-on-one in individual notes, and we still do that, not as much as we used to in the past since we've been launching multiple funds. But the Pacific Private Money Fund has been true to form and very reliable. It's conservative in its lending practices, and many, if not most, of the investors in that fund, they wouldn't even be interested in a fund that pays 10%. They think that's too good to be true, and they've got good reason to feel that way. And we don't argue with people about their opinions on how they want to invest their money. So we've been very successful at raising capital for that fund. But I do want to hint on the couple of other funds we've recently released, and that is construction loans are an underserved niche lending product that's in high demand in California, and we've been seeing more and more construction loan requests in the last couple of years, so much so that we've decided to launch a separate fund just to focus on construction lending, and we've got a 3-person team managing that fund that are all very well experienced in construction loan underwriting, and so we just launched that fund. We're just raising capital now, so we don't have a track record with it, but we are looking to achieve yields between 8 to 10%, which you would expect, again, if you were going to invest in a fund that relies on future value or completed value of construction projects.
And how do people get a hold of you if they want more information about any of these funds?
Yeah, so, and I know we got to cut to our commercial break soon, and maybe we'll talk a little bit more about that on the next segment. But PacificPrivateMoney.com, our website has been updated to include the 4 ways to invest with Pacific Private Money. Go to PacificPrivateMoney.com, and of course, all of our contact information is there: email, phone numbers. It's easy to get a hold of us. We'd be happy to send you a kit.
Very good. All right, guys, third trivia question. We're talking biology here. What is the name of the process by which green plants use sunlight to make food from carbon dioxide?
Another softball.
I know. Well, I figured if I was going to bring biology up, I couldn't make it too hard, right? Call 888-1190. Spell biology.
Consulting.
First caller with the correct answer is going to win that tanning certificate. Stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Nam Phan and Mark Hunt of Pacific Private Money. Third trivia question was, what is the name of the process by which green plants use sunlight to make food from carbon dioxide and water? Nam.
Photoshop.
Photoshop, yeah. What's the
photosynthesis?
Photosynthesis, yes. Okay, 3 softball questions. You got them all right.
Spell it, Edward.
Not without spell check.
Yeah, so that's spell check. Yeah. So, Mark, you were only able to touch on one of the funds, the construction fund.
No, sorry. Construction fund, yeah. Yeah, I was just going to ask Mark, what kind of properties or what kind of loans, construction properties would you put or consider for the construction fund?
So the North Star Fund was essentially designed to do major remodel and ground up construction of single family residential homes in California. That's the strategy we're taking. A lot of people aren't aware that there are still about 10,000 homes that have not been rebuilt thanks to a multitude of fires throughout the state of California over the last 3 years. In our backyard in Santa Rosa, there are still thousands of empty lots where there were homes, and we are lending to many contractors who are building both replacement homes as well as spec homes. And those spec homes, speculative homes that is, are in high demand because there's just not a lot of inventory in the Bay Area, as we all know. In fact, there's just not a lot of inventory in California. So we know for a fact that construction loans are in high demand. We know for a fact that many banks are not making construction loans right now. We also know for a fact that many really successful and talented general contractors and property developers are not able to get bank financing because of, credit issues that they have. They're all self-employed. They're not able to prove income sufficient to qualify for bank rate construction financing. So companies like ours are in a position where we can provide a much needed service, much needed capital to help replace the stock of housing in California. So this is really important. This is an important product. It's an important investment opportunity for people to know and understand. We have a lot of material that we can share with listeners about how this fund works and how this fund is going to return 8 to 10% yields based on our various financial modeling that we've done. And again, we've been in this business for long enough to know how to pretty accurately financial model this. So again, single family residential homes, ground up and major remodel is where we're focusing the North Star Fund. Going back to our legacy fund, the Pacific Private Lending Fund, that's paying in the high 7s right now, high 7% range. The loans we focus on there are, again, mostly single family residential. There are a few construction loans in there, but the vast majority of the loans we do in there are existing properties at 70% or less loan to value. Our weighted average loan to value in the fund is closer to 60%, so well protected, lots of equity. 75% of the loans are residential properties. The other 25 are a mixture of small commercial and multifamily, and again, a more conservative fund. And then lastly, we have a third fund we've launched recently, and this one is really a very specific and particular fund. It's a smaller fund that we work with our high net worth clients, and it's designed to provide like a warehouse line of credit for us to be able to use the capital to close loans that we're going to sell within 30 days. So that one has a larger minimum investment requirement of about $500,000 or more, but it's really for people who have capital in cash that they don't want to commit long term. They want to keep it relatively liquid so that they can invest in real estate or their business or what have you. And when you're sitting on cash in large amounts, there are very few opportunities for you to park it in a place that earns anything. Not if you want liquidity, but in our so-called Freedom Fund, since we only use that capital to purchase loans that we know we're going to be able to sell within 30 days, the money revolves quickly, and therefore we can accommodate deposits of $500,000 or more, pay a 7% fixed rate of interest, 7% fixed rate of interest on that capital, and you can call that capital at any time. There's no minimum hold requirement. You can put it in and keep it in for 30 days, call it, and it may take us up to 30 days to redeem it, but oftentimes, again, because of the liquidity nature of the fund, we can oftentimes redeem that in anywhere from 7 to 15 days. So again, it's a special vehicle designed for people who typically won't, may not be a fund investor strategist, but the idea of a short-term vehicle to park your money for 7%, which allows us to be able to work that end of the business where we have buyers of loans, but we have to close them first. And there's a lot of benefits for us to be able to do that, to be able to accommodate a borrower's need to close quickly and reliably. So we use that capital to do that. And then we can turn around and sell it to our hungry investors who love to invest in individual notes. So, so for more information, again, please go to our website. We've just updated it recently to show what we say 4 ways to invest, our 3 funds, as well as going to, there's a link to our note purchasing platform, which is called privatemoneyloans.com. But go to pacificprivatemoney.com. I know it's a little bit confusing. We've got privatemoneyloans.com. We've got pacificprivatemoney.com. But if you go to pacificprivatemoney.com, that's where you will see our various funds, and you can click links to hit their landing page for more information, or you can just ping us by email and we'll send you the offering materials that go over that in detail. And right now we're having lots and lots and lots of conversations with investors who are interested in our menu of financial instruments that you can invest for high yield. So if you're a little bit nervous about the stock market right now, and many are, it's back to its highs again, even though people are nervous about certain underlying economic conditions. If you're looking to cash out and take some profits because you've been in the market since the most recent dip, might be a good time to look at some mortgage secured funds as a high yield investment option.
All right.
And
let's see.
If I can add too,
yeah, go ahead.
you know, we have an event coming up, the next
webinar,
June 23rd, which is Tuesday at 5 o'clock. So you can register for it on our website or call us, and we'll register you. And the last one we had was April 16th. It was really well attended. This will be similar. It'll be a Zoom meeting where you can learn about not only the Pacific Private Fund, but also the other funds that Mark mentioned.
Okay. When we come back, we do have an email that has to do with originating notes or buying existing ones. We'll hear about your strategy on that. And then when we come back, we'll also have some closing comments. So don't touch that dial. The Best of Investing is going to be right back. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hoff and Nam Phan of Pacific Private Money. No trivia question this time. You guys, you wiped me out, man. 3 for 3.
I wanted another softball.
Yeah, something easy today.
All right, I'll come up with something. So an email comes in, says, does your company only originate notes, or do you sometimes buy existing notes?
Yes.
Next question.
Yeah. So, well, for the longest time, we've been an originator of loans and notes throughout, primarily in California. But recently, we've come across opportunities that we also want to make available to our investors, where we're buying notes, and you know, there's more to come on that. But there's an increasing opportunity and need for people who, and these are in other markets, but who want to sell seller carrybacks, and these are notes that we can acquire throughout Texas and eventually other states.
Well, actually, throughout anywhere. I mean, it's just that in California, individual seller carrybacks aren't quite as I don't want to say popular, but it's not done as often as it is in other states. So. But I guess to answer the question, you know, anybody holding a note that they carried back on the disposition of real estate, oftentimes they're looking for liquidity options. And there are platforms online where you can sell these, but, you know, oftentimes, you know, those might, you know, have, you know, less than favorable results. So really,
we got to do some due diligence on it, because these people, they're buying.
And right, and so when you're
layaway plan.
Right. So when you're dealing with investor to investor, they're not in the business of evaluating those, and we are. So again, for those who are holding a note and want to learn about their liquidity options, you know, we have the capability and the capital. We have the capability to underwrite the type of loan that someone is holding, and we also have the ability to make an offer on liquidating, you know, and purchasing that note from them and taking them out and giving them cash.
Okay.
So it's a really, go ahead, Edward.
No, I was just going to say before we've got just a couple of minutes, and I wanted to get Nam to give us the deal of the week, but we're going to come forward with.
So the answer is yes.
Okay.
Yeah.
I was trying to make a long story short by saying yes at the beginning, but hey, so deal of the week is another alt lender fallout. So alt lender non-QM scenario that came to us very recently at the beginning of this month, where somebody was in the middle of a purchase. This was an investment property that they were borrowing, and what happened was they were in the middle of getting the loan when their non-QM lender suddenly just pulled the loan from them. Said we've stopped lending. And again, this is somebody who is in a bind, another 11th hour scenario that came to us, where they're purchasing a property in Antioch, and this was going to be used for, it was an income property, it was one they were going to rent, and they didn't have enough down, but they were using another rental property that they had as collateral. So again, this is a scenario, this is not a owner-occupied, somebody buying for their primary residence, but it was for buying an investment property. But again, it's another loan that came to the rescue to a borrower who had a non-QM loan lined up, and we closed quickly. And again, it's just a common scenario that we see. It's kind of a vanilla type of deal for us, but that's what we do. We come in and we save situations, especially right now with non-QM lenders ceasing their business. They're coming back, but we're here to fill in that gap.
All right, so why don't you give out your information in case people want to either borrow from you or invest with you?
Yeah, same number. Call us at 415-883-2150, or go to our website, www.pacificprivatemoney.com. You can click on the lend or borrow or invest.
All right, simple enough, guys. Here's our thoughts for the day. Good players inspire themselves. Great players inspire others. And every champion was once a contender that refused to give up. You know who said that? Rocky Balboa. I don't remember him saying that, but that's apparently the quote. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions and asking, actually, that's what it is. We're answering more trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.